Iran's inflation has been hovering around extremely high levels, the national currency has crashed multiple times, and yet the country still manages to survive. How? Iran's current economic situation is shaped by three powerful forces happening at the same time: international sanctions, deep structural problems inside the country's economy, and ongoing geopolitical tensions in the region. To truly understand what is happening, we need to look at several key parts of the economy. These include rising inflation, the falling value of the national currency, oil revenues, unemployment levels, government finances, and the long-term structural challenges that continue to affect economic growth. By breaking the situation down into these areas, it becomes easier to see why Iran's economy faces such serious pressure today. Let's start with one of the biggest problems in Iran's economy today: inflation. Chart increasing. For several years now, Iran has been experiencing extremely high inflation, often between 40% and 50% every year. That means the price of everyday goods keeps rising rapidly, making life much harder for ordinary people. So why is inflation so high? First, the Iranian currency, the rial, has lost much of its value. When a country's currency weakens, imported goods become much more expensive. Since many essential products depend on imports, prices across the market begin to rise. Second, the government frequently spends more money than it earns. This creates what economists call a budget deficit. To cover that gap, the central bank sometimes prints more money. But printing more money increases the amount of cash in the economy, which pushes prices even higher. Third, international sanctions limit the supply of many goods entering the country. When supply becomes smaller but demand remains high, prices naturally increase. For ordinary people, the impact is severe. Food prices rise quickly, rent becomes more expensive, and salaries struggle to keep up with the rising cost of living. In fact, many Iranian families now spend more than half of their income just on food. Baguette bread. As a result, living standards have been steadily declining. Now let's talk about the Iranian currency itself. The Iranian rial is currently one of the weakest currencies in the world. Over the past decade, it has lost more than 90% of its value against the US dollar. Money with wings. To understand how dramatic this change is, consider this: around 2015, $1 was equal to roughly 32,000 rials. But between 2023 and 2025, in the open market, the exchange rate often exceeded 500,000 rials for just $1. So why does the rial keep falling? One major reason is sanctions. Iran has limited access to foreign currencies because its oil exports and financial transactions are restricted. Another reason is low investor confidence. Many investors worry about sanctions, political tensions, and economic instability, so they hesitate to invest in the country. There is also something called capital flight. Wealthy individuals and businesses often move their money abroad to protect it from losing value. As a result, many people inside Iran try to protect their savings by converting their money into US dollars, gold, or real estate. But when more people sell rials to buy these assets, it weakens the currency even further. Finally, we need to talk about oil, which is the backbone of Iran's economy. For decades, oil exports have been the main source of income for the country. Historically, oil has provided between 50 and 70% of the government's revenue and most of Iran's foreign currency earnings. However, international sanctions, especially those imposed by the United States and its allies, have directly targeted Iran's oil exports. At one point, Iran was exporting about 2.5 million barrels of oil per day. But under heavy sanctions, exports dropped to around 1 million barrels per day, sometimes even less. Still, Iran has found ways to adapt. The country often sells oil through alternative channels, including China, informal trading networks, ship-to-ship transfers, and discounted oil sales. Today, China has become Iran's largest oil customer, but even with these strategies, sanctions still have major consequences. Iran often has to sell its oil at lower prices than the global market, and payments can be delayed or restricted. This means that even though Iran continues exporting oil, the country earns far less revenue than it would under normal economic conditions. Now let's look at another major challenge facing Iran's economy: government budget problems. For many years, the Iranian government has struggled with chronic budget deficits. In simple terms, this means the government consistently spends more money than it earns. There are several reasons for this. First, oil revenues have been reduced. Because of international sanctions, Iran cannot sell as much oil as it once did, which significantly cuts one of the government's largest sources of income. Second, the government provides large subsidies to support everyday living costs. These subsidies cover essential items such as fuel, electricity, bread, and medicine. While they help citizens manage rising prices, they also cost the government billions of dollars every year. Another factor is the large public sector. Many government employees and state-owned companies depend heavily on public funds, which increases overall government spending. So how does the government deal with these financial gaps? Often, it prints more money, borrows from the central bank, or taxes. However, printing more money usually creates even more inflation, making the economic situation worse over time. Increases. Now let's move to another important issue: unemployment and youth frustration. Iran has a very young population, and many young people are highly educated. Universities produce thousands of graduates every year in fields such as engineering, science, and business. But the economy struggles to create enough jobs for them. Official unemployment rates are usually reported around 8 to 10%. However, youth unemployment is much higher, often reaching 20 to 25% or even more. As a result, many graduates cannot find jobs related to their field of study. This situation has created several serious problems. One of them is brain drain, where highly skilled professionals choose to leave the country in search of better opportunities abroad. Every year, thousands of Iranian professionals move to countries like Canada, Germany, Turkey, and Australia. While this may help individuals build better careers, it weakens Iran's long-term economic potential because the country loses many of its most talented workers. Next, we need to examine the challenges in Iran's banking and financial system. Iran's banking sector faces several serious structural problems. One of the biggest issues is non-performing loans. In many cases, banks have lent large amounts of money to politically connected companies or state-owned businesses. Some of these loans are never fully repaid, which creates financial instability within the banking system. Another challenge is weak transparency. Iran's financial sector often lacks strong regulatory oversight, international compliance standards, and transparent financial reporting. Sanctions also play a major role here. Because of international restrictions, many Iranian banks are largely cut off from the global financial system. This includes limited access to SWIFT, the international payment network used by banks around the world. Without these connections, international trade becomes far more complicated and expensive. Finally, there is a deeper structural issue within Iran's economy: the balance between the private sector and state control. Many of the country's major industries are dominated by powerful institutions linked to the state. These include government organizations, the Revolutionary Guard, and large religious foundations known as boniads. Together, these groups control large parts of key sectors such as construction, energy, telecommunications, and transportation. The result is often weak competition, inefficient companies, and higher risks of corruption. Private businesses frequently struggle to grow because they must compete with powerful state-linked organizations that already control large resources and influence. Now let's look at Iran's position in global trade. Globe showing Europe-Africa. Iran is not completely isolated from the world economy, but its trade options are much more limited than most countries. Today, Iran's main trading partners include China, the United Arab Emirates, Turkey, Iraq, and Russia. These countries play an important role in keeping Iran connected to international markets. Iran imports many essential goods from abroad, including machinery, electronics, food products, and industrial materials needed for manufacturing. At the same time, the country exports several key products such as oil, petrochemicals, metals, and agricultural goods. However, international sanctions create major challenges for Iran's trade. Shipping costs are often higher, insurance for cargo becomes more expensive, and many global companies avoid doing business with Iran due to financial risks. Because of this, foreign direct investment in Iran remains very low compared to what the country's economy could potentially attract. Now let's talk about another important consequence of economic pressure: public protests. In recent years, economic hardship has contributed to several waves of protests across the country. Many citizens express frustration about rising food prices, unemployment, corruption, and growing inequality. In fact, in the past, sudden increases in fuel prices have triggered nationwide protests. Economic frustration has become one of the most significant internal pressures facing the Iranian government today. But despite all these challenges, Iran still has several important economic strengths. Gear. First, the country has enormous natural resources. Iran holds the fourth largest oil reserves in the world and the second largest natural gas reserves. These resources alone give the country significant long-term economic potential. Second, Iran has a large domestic market. With a population of around 88 million people, the country has a massive consumer base that can support many industries. Third, Iran has a surprisingly strong industrial base. Unlike many developing countries that rely heavily on imports, Iran produces many products domestically. These include cars, steel, cement, pharmaceuticals, and even military equipment. Very few developing economies have such a diversified industrial structure. Iran also has a strategic geographic location. The country sits at the crossroads of Central Asia, the Middle East, South Asia, and Europe. In theory, this location could allow Iran to become a major trade corridor connecting several regions of the world. But the real future of Iran's economy depends on two major factors. The first is sanctions and geopolitics. If international sanctions were lifted, Iran's oil exports could increase rapidly, foreign investment might return, and the national currency could stabilize. However, if geopolitical tensions continue, the economic pressure on the country will likely remain. The second factor is internal economic reform. Iran's economy would benefit from reforms such as improving the banking system, reducing excessive state control, creating a better environment for investment, and strengthening anti-corruption measures. Without these reforms, even the removal of sanctions might not fully solve the country's economic problems. So what is the final reality? Iran's economy is not collapsing, but it is under heavy strain. Think of it this way: the country has enormous resources, a large population, and strong industrial capabilities, but sanctions, political tensions, and structural inefficiencies act like heavy weights holding the economy down. As a result, Iran's economy continues to survive, but it grows far more slowly than its true potential. Thank you for watching this video. Please share your comments and questions below. Also, don't forget to share this information with friends and family who might find it helpful. Subscribe to support us and receive more valuable content. Like, share, and subscribe.